A very good afternoon to all of you. After the enthralling first two sessions for the day 2, and for post-lunch, we are here with a session 3 from very well-known Vikram Gupte sir. He'll be dealing in long-form audit report. And just during the sessions, we were discussing just sarcastically that name of this audit form should be changed, because psychologically it's like long-form audit report, it affects a lot. And somehow it's just a checklist, or it covers all entire checklist for the bank audit. But to discuss more, I'll request Mayur Moda, the coordinator for the session, to give a brief introduction of very learned Vikram Gupte sir.
Thank you, Nirav. CA Vikram Gupte is a senior partner of firm Messrs. Fadnis and Gupte, LLP, Chartered Accountants. The firm was Central Statutory Auditor of erstwhile Syndicate Bank. He has got post-qualification experience of more than 30 years in the field of audits, company law, and indirect taxes. He has been actively engaged in implementation of GST since 2010. During the tenure as co-opted member of Indirect Tax Committee of ICAI in the year 2009-2010, he was president of Tax Practitioner Association, Indore, for the term 2017 to 2019. He has presented papers in the seminars, conference on the matters related to GST, VAT, accounting, and audits. With this introduction, I request our Vice Chairman Nirav Agrawal to felicitate faculty with memento. I request sir to take a session further.
Namaskar. Thank you, Mayur Bhai, for the introduction. Worthy Vice Chairman of the branch, Nirav Bhai. I am thankful to the Managing Committee of Ahmedabad branch and my friend Hitesh Bhai Pomal, who invited me to this program today and given me this opportunity of interacting with you. I presented the same session in the last year's bank audit seminar, and when Hitesh Bhai called me up that this year again you are invited to Ahmedabad to take a LFAR session, so it reminded me of a story. एक सिंगिंग कंपटीशन में एक जज थे, एक सिंगिंग कंपटीशन में एक सिंगर थे, उन्होंने एक गाना गाया, ऑडियंस ने किया वंस मोर, वो सिंगर ने फिर से गाना गाया, ऑडियंस ने फिर कहा वंस मोर। तो सिंगर ने कहा मेरे पास और भी गाने हैं, मैं आपको सुनाऊंगा, आपको अच्छे लगेंगे। तो ऑडियंस ने कहा नहीं, जब तक इसको ठीक से नहीं गाओगे हम बार बार वंस मोर करेंगे। So I got the message and I am here today once again amongst you. This long form audit report is basically a separate set of audit report where the bank requires detailed information, confirmations, and verification by the auditors. This picture also gives a message. If you see the picture, these are all cactus plants, looking very beautiful like the audit profession, but it has thorns. In audit also, now we have many regulators watching us day in and day out, and we are always under scanner. And believe me, the philosophy of the audit profession is changing very fast. Bank branch audits are shrinking these days, as you all aware of, because the regulators are of the opinion that this is not giving any value addition to the banks. And therefore, we must strive hard and we must excel in our audit procedures so that we give good concrete information and good observations on the functioning of the branches. The objective of the branch audit is to provide information to the central statutory auditors, because if you go for a branch audit, branches will always say, the branch management will always say, these all system generated statements, this has come from the head office, and we don't know anything. The information is available at head office, and this is all system generated. And when you go to head office, they say this is all come from the branch, and the data is entirely with the branch, so auditor is stuck where to verify all these transactions. But the basic transactions which are carried out at branches are required to be verified, and therefore the responsibility of the branch auditors are very high. The first and foremost challenge is to complete the bank audit in a limited time frame, because the pressure of the management is always there to give the audit reports by so and so date, and therefore to complete the entire exercise we need to be fast, vigilant, and this can be done with a proper audit planning. And with proper audit planning, you can plan the areas of the LFAR along with the branch audit, so that the time taken is very less, and we can provide good observations. If you see, the long form audit report is basically requires certain informations on limits fixed by the management and instructions of the controlling authority, then adherence to the internal control measures and functioning of the branches, some specific transactions and accounts which are required to be reconciled with the head office accounts like inter-office accounts, and finally any window dressing or any other observations which are required to be given by the auditors. So the area covered are asset quality, that is mainly advances, this robustness of IT systems, security policy and information systems policy, processes and systems, and the suggestions of the auditors. So these are the broad categories wherein the LFAR is divided into those areas. We will go by one observations, we will go one by one paragraphs of the LFAR. But before that, there are certain do's and don'ts. So first, plan the areas of the LFAR along with the branch audit program, and then observations to be discussed with the branch head. Because sometimes our team which conducts the audit, they note certain observations based on their understanding and based on the discussions with the branch officials. But when you discuss it with the branch heads, certain new dimensions are there to which you need to understand. The replies to the specific questions, there are specific questions in the LFAR, so replies should be very specific, vague comments need to be avoided, and do not copy paste from the previous audit reports, because there may be certain errors, or you may tend to copy some wrong information in that, because these days the LFAR is to be fed in the systems itself. No separate audit report is required to be issued, and therefore you draft all the comments by your own on your own, and then see what are the implications of that. So the LFAR is divided mainly into two parts, assets and liabilities, and then certain additional areas are there. So it starts with assets, and the first asset is cash, which is the liquid asset, and which is the idle asset. So bank is more concerned about this idle asset if it is lying with the branches. Cash is kept in joint custody. So along with the cashier, there is always one more branch official who is the custodian of the cash, and there are certain procedures and policies which are required to be followed. So we can verify the daily operations, we can verify the signatures of the joint custodian, and you can observe whenever you are in branch, you can observe the overall procedure, how the cash is kept in a joint custody. Then verification of cash at branches plus at the ATMs. ATMs can be on-site or off-site. So the cash limit which is there with the branch is combined of both cash at the branches and cash at ATMs. So ATM cash can be verified whenever you visit the branches, or on 31st day of March, ask the branch management to generate a scroll. If the scroll is generated on any other date, then ask them to reconcile with the balance as on 31st of March, because the transactions of deposit and cash receipts will always be there, and it can easily be reconciled. Then we are required to comment upon the cash balances which vary significantly from the retention limits. So we need to know what is the retention limit of that particular branch, and as I mentioned, the retention limit consists of ATM plus cash at the branch. So consider the total limit, and then the balances are to be verified on a cash book, from the cash book on a daily basis, and the balances which vary significantly from the retention limits need to be noted. The minor differences or slight deviations from the retention limit can be ignored in that. So you can report all the balances which vary significantly from the retention limit. ATM cash call we have already discussed. And secondly, one important point with respect to cash shortage, because there are specific inter-office accounts provided by the head office where cash excess or cash shortage can be parked, and it needs to be reconciled on a daily basis. So just see whether there is any cash shortage is there and to which account it is parked. Normally, insurance coverage for the cash at branches, it is taken by the head office at a global level or universal level, and therefore the branches are not aware of the cash policy, and you can take that observation from their management representation letter and mention that in your audit report that the cash insurance policy is taken by the head office and no copy is available with the branches. Along with cash, there are bank balances with the RBI, SBI and other banks. RBI because the branch sometimes may be a currency chest branch, and therefore they are required to keep a balance with the Reserve Bank of India. For all other nationalized banks, they may keep a balance with the State Bank of India for clearing purpose, or any other banks for any other transaction, or sometimes for cash transactions, because bank branches require cash, they need to deposit cash, so they have the balances with other banks. So as we do in other audits, we obtain balance confirmation letter from those banks and take a copy of the mirror account with that bank and verify whether the transactions which are there in the reconciliation statements are reasonable and explainable. There are reasons to that. Cash transactions which are not responded, or any other bank charges or items pertain to income and expenditure account or profit and loss account are required to be adjusted in the balance sheet, and you can issue MOC for that. With respect to currency chase branches, there are certain penalties charged by RBI, and therefore if you are auditing a currency checks branch, so be particular to see the reconciliation statements and whether any penalties are debited by the Reserve Bank of India, because the branch officials normally do not account for those penalties, because in their opinion it is to be recoverable, it is to be recovered from the concerned official, and they do not account it for in the profit and loss account of the branches. But for all accounts purpose and to give a true and fair view, all such charges and penalties are required to be accounted for in the balance sheet, in the profit and loss account of the branch. Any entries which are generated prior to 31st of March and which are responded after 31st of March before the date of audit or which are unresponded till the date of audit are particularly required to be checked, so that if those entries are proper and explainable, then only you need to, then only you can accept that. Any other special observations, if you require, if you want to report to the controlling authorities, you can mention in this particular clause. Money at call and short notice. The banks are required to maintain CRR and SLR, and therefore the idle cash available with them, they need to deposit or they lend it to the other banks, plus they take loan from the other banks on a daily basis. Normally these function is controlled by the Treasury Department at head office, and therefore branches are not authorized to do such kind of transactions except deposit and withdrawal of cash for their requirements. But if money at call and short notice such transactions are available at branches, you need to check whether the branch is designated for that and what are the instructions and policies for such kind of transactions which are being followed by the branches or not. If such transactions are there, you need to obtain year-end balance confirmation letters and with the bank like we do for all other assets. We need to verify the interest adjustments also, because if we lend money or if we borrow money, we need to pay interest or we need to collect interest from them. So any interest adjustment which is required to be done for such transactions, and the instructions of the instructions of the controlling authorities are required to be complied. So in this particular clause D, we need to give whether the instructions have been complied or not. The next point is respect to investments which is available for branches outside India. So I hope we get audit for branches outside India. I wish you all the same. And such kind of transaction, as I mentioned, again are controlled by the Treasury Department of the head office. But in case of branches which are situated outside India, the transactions are done by the branches themselves, and we need to take the balance confirmation. We need to see the registers or demat accounts where the investments have been parked by the branches, verify physically verify the investments, any interest or dividends which are required to be received, whether the same has been accounted for or not, and what are the transactions have been undertaken by the branches during the year. Then the valuations are required to be checked. Normally the investments are either available for sale or held to maturity, and what is the particular type of that transactions and the valuation adopted for the same, whether it is as per the bank's accounting policy, and if the investment is overdue. So if the principal and interest is not paid and it remains overdue above 90 days, in that case it needs to be classified as non-performing investment. Now the most favorable subject, dear subject, which takes 90% of our bank audit time, is advances. So if you see the clauses which are required to be replied in this particular section is divided into the entire cycle of that advance. It starts from the credit appraisal, wherein the eligibility of the borrower is checked, whether the product which is made available to that borrower or which is sanctioned to that borrower suits the requirement or whether it is properly followed. Then sanctioning and disbursement part. Third is the documentation, and then monitoring and review of those advances, and asset classification as per IRAC norms. I am sure you must have had a session on IRAC norms, because how the classification is made as per RBI norms, and the non-fund based facilities. That is where the funds of the banks are not involved. For example, bank guarantee and the letter of credits, any acceptances and endorsement also. This was a new requirement which was introduced last year, and you need to give a list of all types of advances which you have verified in the branches. So if you see the particulars, then account number, account name, balance at the year end, funded and non-funded, and total. So total accounts which you have verified the list is to be given. Then you compare with the total outstanding advances of the branches. So total outstanding advances needs to be calculated. Touch me not here. Okay. I need to speak like this. It becomes sensitive like a bank audit. So total outstanding of the branch, as I mentioned, is to be considered fund-based and non-fund-based facilities, and then the percentage examined. So the regulators wants to see how much percentage you have covered in your verification at the branch level. All large advances are required to be covered. The definition of large advance is the 10%, any account which is more than 10% of the total outstanding of the branch, or rupees 10 crore, whichever is less. So you need to see all types of, or all large advances in that particular branch. All other advances can be checked on a test check basis, and based on your sampling carried out. So the first part of the advances cycle is credit appraisal. So the question is whether the branch has generally complied with the procedures and instructions of the controlling authorities of the bank. So there is a credit policy approved by the board of directors of every bank, and it is reviewed on a yearly basis. So you need to see the credit policy of the bank. You need to check what are the products available, what are the terms and conditions of that product, and ensure whether all procedures have been carried out. Particularly when you see the credit appraisal part, the lacuna or the deficiency is on part of either verification, either eligibility of that borrower with respect to the income, so that income criteria and other criteria which are required to be completed for that particular product are not there. Then pre-sanction visit is there, but post-sanction visit is not there, which will come in the second part after disbursement. So pre-sanction visit should be there. Proper analysis of the financial statements. I have my personal experiences and personal belief that this is the most neglected part in a bank branch, the analysis of financial statement, because whenever the financial statements are received by the branches, they take it and file it in their documents, but they do not open it, they do not see what is given by the auditors, what qualifications are there in that audit report, and sometimes the audit report is not there, they just take the audited financial statements in the form of balance sheet and P&L. CIBIL verification is required to be checked, whether that CIBIL score is proper or not, and if there are any deviation, it needs to be reported in that particular clause. Then in case of quick mortality, so quick mortality is basically the instance where the advance becomes NPA within 12 months from the date of sanction. So you take the entire advances in an Excel sheet, compare the date of sanction and the date of NPA, and you will get that which are the accounts which are this quick mortality feature is there. But in case of, you need to see the advances which was sanctioned in the last year also, last year as well. because if the advance was sanctioned in the last year and it becomes NPA in the current financial year, then also it qualifies for that quick mortality cases, and you need to see a complete review or complete list of last year's sanction as well as current year's sanction. The accounts renewed or without enhancements, those accounts are to be excluded. So the accounts which was sanctioned 4 or 5 years back and which was enhanced during the year and it becomes NPA, so such accounts are not required to be considered for quick mortality purpose. And this 12 months period is to be reckoned from the expiry of holiday period, that is after the moratorium. So once the moratorium period is over, then only this 12 months period is required to be reckoned. The next question is with respect to applicable interest rate, whether it is correctly entered into the system. So normally some interest rates are aligned to that particular product, but the sanctioning authority can give concessions for such interest rates, and therefore we need to see the sanction letters and check on test check basis, see whatever interest rates are entered in the system by the branches. This data is entered by the branches itself, and it is not entered at the head office level, and therefore it is of utmost importance that we need to see whether the master data which is made available at the branches, it is correctly entered into the system or not. Then whether interest rate is periodically reviewed or as per the guidelines applicable to floating rate loans. So we need to take the circulars issued by the controlling authorities with respect to changes in the interest rates, and need to see whether that changes have been made applicable in the system or not. Because the interest calculation is done by the system, we can see on a test check basis the interest rate which is fed in the system, whether that calculation is proper or not on some test check basis, and then you need to prepare a documentation for the accounts which you have verified. Then the second question is with respect to frequent renewal or rollover of short-term loans. The renewal or rollover is basically for credit facilities, working capital facilities, which are sanctioned for 1 year. Term loans are not renewed every year, but this cash credit facilities are renewed every year. And if it is not renewed, it becomes NPA if it is not renewed within 180 days from the date when it was due for renewal. And short renewal is permitted, but it is permitted only twice in that period of 180 days, and one short renewal is available or is effective for 90 days only. So 2 short renewals or technical renewals, in some banks they call it technical renewals, so it is permitted twice in that period of 180 days. Then credit rating. Credit rating is basically, this procedure is given by the head office. At branch level, we need to see whether the procedure is properly followed, that computation is properly done, and this source of the information from which the credit score is calculated is genuine or not. It comes from the financial statements given by the borrower. So the norms or the basis of that credit rating is provided by the head office. So the credit rating which is calculated by the branch should be properly entered in the system. We need to ascertain the correctness of the credit rating. Then obtain the list of accounts where the credit rating is mandatory. Normally in many of the banks that is made mandatory in case of limits above 5 crores. And if the credit score is poor, then that should be marked as unrated credit rating. or whether any manual intervention is possible to change the credit rating. The score which is calculated and which comes in that credit appraisal or credit rating sheet, whether any manual intervention is possible in that. So after credit, this appraisal, and we come to sanction and disbursement. So normally the sanction is within the delegated powers. No branch manager or official will exceed his delegation of financial powers. But if you see, there may be cases, suppose if the limit, his authority level is 10 lakhs, he may sanction loans for 9 lakhs, 9,50,000 and multiple accounts, multiple loans to the same set of borrowers. So normally they don't exceed this delegated authority with them. So sanctioning, there should not be any problem. If there is any deviation, that needs to be reported to the controlling authorities immediately. But the disbursement without complying the terms and conditions. Sometimes the sanction letters comes to the branch and immediately the disbursement is made without complying the terms and conditions of that sanction letter. Sometimes special conditions are there in that sanction letters. So we need to check whether all sets of conditions have been complied or not. And the third question is with respect to loans to companies for buyback of shares. As we all know, there are certain restrictions for buyback of shares. The buyback can be done only with available reserves and surplus of the company with accumulated profits, not out of the revaluation reserves and so. And therefore, no finances can be made available to buy back shares of a company to any corporate borrower. So we can verify which are the corporate borrowers available at the branches. We can see their balance sheets, audited financial statements, whether any loan is provided to them for buyback of share. And particularly we need to be very vigilant to check whether any CC or OD limit is utilized for such buyback. If that OD limit or CC limit is utilized and that is within the sanction power, within the drawing power, then only that is permissible, because there are fresh funds which are brought in by the company, but that CC limit otherwise should not be used to buyback of shares. Then after sanctioning, the documentation part is there. You can see many instances where the documentation is not done by the branches, or particularly they get the signatures of the borrowers on the blank agreements. So they just get the signatures and they disburse the loan amount. So all the documentation should be proper. All documentation should be as per the product of that loan account. Then custody of documents should be, there should be a strong room, or all the documents should be properly stored. In some cases, the equitable mortgages or registered mortgages or some other documents are executed at some other branches. If the branch is very small, then the equitable mortgage or it is taken place at some other place, at Tehsil place or district place. In such cases, the confirmations are required to be obtained, or that is required to be taken on records. Yeah, please. Which document you are referring? LAD, okay. Yes. Because the documents, normally LAD and if you see this 15G, 15H, they are also kept blank. So जब भी वो बोलते हैं कि ये हमने ले लिए but भर के रखना बाकी है. So that needs to, just ask them to sign and put the date on that, so that at least that is that is valid for next 3 years. Then payment of stamp duty, Then charge creation. If you see, there is a requirement to report by the company and as well as by the auditors in company audits where if any charge is pending to be registered with the ROC. So if you see the audit report or balance sheet of a company, you can find out whether any pending charge is there or whether any charge is there which is not satisfied. Then time-barred documents, as we discussed, LAD is there, and all the documents once executed are valid for 3 years. After every 3 years, they are required to be renewed. And in some of the cases of large amounts, the documents are required to be legally weighted, either by the advocate empaneled by the branches or by the banks or by the legal department of the banks. So see, I think the limit is 5 crores or 10 crores. Above that, all documents which are executed by the branch are required to be legally vetted by that advocate. So there must be a certificate of that advocate that these documents are proper and properly executed and enforceable in future. Then there are loan against FDs. So all FDs should be there in physical. Original FD should be there. These days the e-FDRs are also there, and in that case the lien should be marked in the system itself. And more particularly, we need to see whether the FD belongs to a minor. No person can take a loan against the FD of a minor unless there is a declaration that this loan will be utilized for the benefit of that minor. Then review, monitoring and supervision. So periodic review, balance confirmation letters are required to be obtained every year, and the renew, as we discussed, review or renewal is required to be done between 3 to 6 months, and a short review is permitted only for 90 days. Then the most critical area is the submission of stock statements to the bank by the borrowers. So, one, the stock statements are not proper. They only provide what is raw material, finished goods, or the total stock they provide. They don't give any quantitative details, rate, etc. There is no details of the stocks, and particularly the creditors outstanding against those stocks, because the stock should be paid. For calculation of drawing power, only the paid stock should be considered, but no details of the unpaid creditors or debtors. If there are, the limit is sanctioned against debtors, that there is a date, there is a particular days against which it can be made available. So 90 days or 120 days are generally the norms. The eligible debtors can be considered by the branch, but if you see the stock statements, no such aging details of the debtors are provided. And normally there is a major or vast differences between the audited financial statements and the stock statements provided by the borrower. So the smart borrowers, what they do, they don't provide the stock statement as on 31st of March. Either they give it for the 15th of March, or they don't at all not provide for the month of March. In that case, we need to rely on the last submitted stock statement, that is February or January, whatever is there. Because if the stock statement is not again provided for 90 days, in that case the account becomes NPA. In case of loans above 5 crores, there is a requirement of stock audit by the independent chartered accountants. So if that loan account falls for that credit audit, stock audit report, then you need to see the stock audit report submitted by submitted by your fellow professional. Sometimes the banks they don't keep it on record, because in one of our cases the stock audit report was received by the branch, and there were certain major qualifications with respect to stocks and quantity. And that stock audit report was not kept on record. And when we find it and when we asked, they said that that audit report is not in the proper format. We have given a new format. So format is fine, but what about the observations? So we need to see in the stock audit report is made available in all eligible cases. With respect to advances to non-corporate entities, the RBI guideline provides that you need to submit audited financial statements. So normally the tax audit reports obtained under section 44 AB is provided by the borrower, and that is kept on records by the branches. In case of consortium or multiple banking arrangements, if the bank is not a lead bank, in that case you can get a certificate from the lead bank that due diligence has been done properly done by the bank. Or in case the bank is a lead bank, then bank has to initiate the due diligence report. In case of securities, normally the securities valuation reports are obtained by the branches, but the security valuation amount which is there in the CBS system is done as per the last year, and there is no revision in that. In case of vehicles, commercial vehicles, the security value is to be depreciated every year. In case of commercial vehicle, it is to be depreciated by 30%, and in case of other vehicles, it is to be depreciated by 15%. In case of land, building and plant and machinery, the valuation report once obtained is valid for 3 years. In case of advances above a particular limit, say 5 crores in that case, the report of 2 valuers are required to be obtained by the banks. So it links with the IRAC norms also. If there is a deterioration in the security value and it is eroded by more than 50%, in that case that account can be classified as non-performing in that particular year. Then deficiencies including value of securities and inspection thereof, or any other adverse features such as frequent or unauthorized overdrawing beyond limits, inadequate insurance coverage. So insurance policies must be there, having a hypothecation clause in favor of the banks. In case of frequent or unauthorized OD limits, which is sanctioned temporary, it is called temporary OD, TOD. So you can see from observations in a particular loan account that if TODs are sanctioned very frequently, and if the account is not running properly, and whenever TOD is sanctioned, the account balance exceeds the original sanctioned amount, in such cases the account should be checked and classified as non-performing asset. The bank has a system of red flagging account. So there are certain procedure or norms which are made available to classify or to red flag a particular account. And there is a RBI guideline also with respect to early warning signals. So there is a famous book called Signals Were There. So if from the conduct of an account you can see that the account is functioning properly or not. And if any account is marked as red flagged, it should be properly reported to the controlling authority. And once it is marked as red flagged, it is normally kept there for 6 months under observation. And there is a committee at head office level which observe it. And once they clear it, then only that red flag can be removed. Then the last one is to comment on adverse features considered significant in top 5 standard large advances. So large advances we have already discussed. There is a limit. So in top 5 standard large advances, if there are any deviations or adverse features, that need to be reported in that particular clause. If you see the long form audit report, all of you must have done bank branch audits. Now everything is to be entered in the system itself, and there are annexures available for every clause, so that if you want to report certain deviations or observations, there is a annexure available or attached to that. Then asset classification and provisioning of advances and resolution of stressed asset. The first and foremost, the classification of non-performing asset or NPA classification, it should be done by system. There should not be any manual intervention in that. Second, this SMA-wise classification of advances is also provided by the Reserve Bank of India. So SMA 0, 1 and 2, we must have discussed that in previous sessions. So SMA 0 is where the account is overdue 0 to 30 days. Then SMA 1 is 31 to 60 days and SMA 2 is 61 to 90 days. So we can verify the SMA 2 list as on 29th of February, and we can see whether those accounts are treated as NPA as on 31st of March or they are classified as standard. If those are classified as standards, so we need to see whatever recoveries are there in those particular accounts, that should be from a genuine source. There should not be any evergreening. Evergreening is a new loan is sanctioned to reduce the arrears of any other overdue of any other loan. So there should not be any evergreening. And particularly check total list of particularly this take list of total advances, compare it with the balance sheet. So the total list of total advances, the amount, it should match with the amount of advances given in the balance sheet. Then review NPA related menu codes. Return of 3 or more checks due to non-availability of funds. These are all early warning signals in a particular bank account. And this devolvement of LC and revocation of BG, that we will discuss in when we do this non-fund based facilities. So if the devolvement of LC and revocation of BG is there and the payment is not made within 30 days, then such accounts are directly classified as non-performing assets. Then whether there is any request for extension of time for creation of security. So till that time, if the security is not created, the loan advances are, the advances which are given to the borrowers are unsecured. Promoters pledging shares in the borrower's company due to financial stress. This is again an indication of early warning signal. Then we need to check the list of advances which are having outstanding in excess of 10 crores, which have either been downgraded or upgraded. So downgraded, there is a natural process. If the account is classified as substandard, next year it will go to D1 category, and next year it will go to D2. But in case of upgradation, once one account is classified as NPA, it can only be upgraded when the entire overdue of that account is recovered. Then reporting of accounts restructured, rephased to controlling authority, and any regularly stands for resolution of stressed assets. So normally all stressed assets are transferred to specialized recovery branches by the bank these days. and that these specialized branches, they take care of all stressed accounts, and recovery processes or recovery proceedings are controlled by them, and they go by for surface I or IBC or any other available legal methods for that. Then upgradation in non-performing advances is in line with the norms of RBI. As I mentioned, it is possible only when the entire overdue account is received and not partial recovery. In case of partial recovery, there are certain accounting policies with respect to banks that it is adjusted against interest, then charges, and then the principal amount. Then we also need to check the sources of funds used to repay overdues, and it should be from a genuine source, and as I mentioned, it should not be by sanctioning of a new facility to that borrower. Action for recovery of advances or recalling of advances. If the account is stressed, the banks may recall the entire amount. We need to comment upon such actions which are taken by the bank branches. And with processes under IBC is mandated but not initiated. Whether IBC process is mandated by the or sanctioned by the head office, but it is not initiated by the branch, then we need to comment upon that. Then appropriate claims for credit guarantee, whether guidelines issued by the RBI are followed. And there is a credit guarantee corporation, so all such bad advances, whether the where the insurance is taken by the branches, the claims are lodged with that Credit Guarantee Corporation of India, and we need to check whether the claims filed by the banks are sanctioned or rejected, and what are the provisions required in that. Obtaining valuation report from approved valuers, as we have seen that the reports are valid for 3 years, and unless it warrants a shorter duration. In some cases where the account is not, this factory, suppose the factory is not operating for a long time, in such cases the value of that security is depleted fast, and in such cases we can ask for, or the bank sometimes take faster valuation, very frequent valuation reports from the valuers. Then compliance with recovery policies prescribed by the controlling authority, particularly where the banks where the OTS has been sanctioned by the banks in excess of 50 lakhs, such accounts are required to be verified, and the execution of decrees obtained for recovery from defaulting borrowers. If any court has given any or issued any decree, whether that decree has been implemented by the branches or not. Then recovery is properly appropriated against principal and interest. As I mentioned, there is a policy of every bank that first to apportion that recovery amount against the interest, then the charges, and then the principal amount. So that should be apportioned as per the bank's policy. Then relevant documents obtained from centralized processing offices. These days, many of the banks for retail loan facilities, they have created CPC for faster processing of such loans, which are retail loans are basically automobile, housing, personal loans, education loans. So if CPC is there, in that case, and the loan account is parked in the branch, but the processing is done by the CPC. So the entire documentation is available with the CPC, but the confirmation is made available to the branches. So we can verify such documents on test check basis. And finally, the list of major deficiencies in review, monitoring and supervision. Then after funded or fund-based facilities, we come to non-fund-based facilities. So all bank guarantees, letter of credits, acceptances or endorsements which are where the funds are not involved. These are called non-fund based facilities. So if such facilities are sanctioned to the borrower and LCs or bank guarantees are devolved or bank guarantees revoked during that particular year, and if it is not paid within 30 days as we have seen, so such cases are to be reported in the format as mentioned on the slide. Invocation date, name of the party, beneficiary name, amount and recovery date. And if the amount is not recovered within 30 days, this reason for non-payment. Two important things here which we need to keep in mind is one, the amount, if the bank guarantee is revoked or letter of credit is devolved, LC is devolved, in that case, the debit should be to the borrower's loan account and should not be to any other loan account or to any other inter-office account. Sometimes the branches, what they do, they park that debit amount to some other account in the branch and not debit to the particular loan account. And secondly, there are interchangeability of advances. Suppose a 10 crores limit is sanctioned to a borrower with interchangeability between fund-based and non-fund-based. So we need to check whether that interchangeability is sanctioned after the such instance, that is, if the BG is revoked or LC is devolved. After that, interchangeability is not permitted. It should be done at the time of original sanction only. And once that instance happens, then it should be debited to CC account. The other assets, which are suspense accounts or sundry assets, these are basically parking accounts. So these accounts are created by head office. There is a proper guidance from the Reserve Bank of India that these parking accounts can be created by accounts department only with the approval of managing director or 2 levels below the managing director of the bank. All such accounts should have a proper reason or proper set of transactions which can be effected through such accounts. So that accounts are there in the branches also, suspense accounts or sundry assets accounts. So at the branch level, we need to see the expeditious clearance of items which are debited to suspense accounts, and if old outstanding balances are there, year-wise breakups are required to be given. We also need to assess the internal controls and the system of the bank, that how such entries are parked in that account and how efficiently it can be settled on a regular basis. And if you see, as I mentioned, if such, for like the LC is devolved and BG is revoked, such accounts sometimes parked in inter-office accounts, or some cash is deposited, or sometimes these accounts are debited and credited to a particular loan account to save that account from becoming NPA. So if such unusual items or transactions are there, we need to report in our LFAR. Then after completion of assets, we come to liabilities part. So as other assets are there on a debit side, sundry liabilities are there on the liability side. So first is the deposit. So deposits which are taken or accepted by the banks, FDs, term deposits, saving bank accounts or current accounts. So normally in banking system it is called CASA, current account, saving accounts, or other term deposits. So we need to verify the process of identification of inoperative or dormant accounts. So if there are no transaction in a particular account, such accounts are, they become dormant after 6 months. So there is a procedure prescribed by the bank that once that account is operated or is classified as dormant account, then it can be made operative only when certain cash transactions are there. So that depositor comes to the bank, deposits some cash in that particular account, provides the KYC once again, and then only the branch manager transfers that account from inoperative to operative accounts. Before that, there cannot be any transactions, because that is a very fraud-prone area, and fraudulent transactions can be parked in such dormant or inoperative accounts. So we need to see the process, how it is converted to operative accounts, whether such accounts are identified by the branch manager, branch officials. And if the deposits are lying there for more than 10 years, then this is transferred to RBI in that depositors education and awareness fund. And unusual large movements in the aggregate deposit at the year end. So normally for window dressing or to show a higher deposit and a higher deposit balance in the balance sheet, some branch officials, they do such kind of things, and they take movements, short-term deposits close to the balance sheet date, which are returned immediately after the balance sheet date. So we can compare the deposits as on the balance sheet date and as on the date of audit, particularly because if such deposits are there, they are done away with within first week of April itself. And one very common policy method that if there is some unutilized CC accounts, so they debit deposit and credit that CC account. So the advances are also high and the deposits are also high. So branches which are dealing with foreign exchange, they have this FCNRB deposits, foreign currency deposits. So income tax, you all know that there are 3 residential status: resident, non-resident, and resident but not ordinarily resident. Under FEMA, there are only 2 types of residential status. One is resident or non-resident. If any NRI, he becomes resident in that particular year, he is the resident for rest of the period, and all his FCNR deposits or foreign deposits which are there, they need to be treated as domestic deposits. So there is only one exception, that FCNR deposits which are already there when he was a non-resident, they can continue for the remaining maturity period of that deposit. Once that deposits are matured, they should be transferred to domestic deposits. So normally the banks have automatic renewal facility in their systems. So such FCNR deposits which are renewed, we need to see whether the deposit holders are still NRIs or they have become residents. Normally the bank should obtain the passports and this NRI status confirmation every year from such depositors, but normally if you see there are large pendencies that in such areas. Reserve Bank also some 3-4 years back has written to all banks that such confirmations are required to be taken on a yearly basis, but there is no progress in that. That minimum balance requirement and levy of charges on non-maintenance or minimum balance. So normally the system levies certain charges if the minimum balance is there in a particular account. So we need to take a list of all such advances, all such deposits where the balances are perpetually low, and you can, on a test check basis, you can verify whether this minimum balance charges have been applied or not. Other than deposits, there are liabilities like bills payable, sundry deposits. These are again all parking accounts, as I mentioned in other assets. These are parking accounts. So we need to check whether there are old balances, year-wise balances, year-wise entries are required to be checked. And the process of identification of such entries, and if the entries are long outstanding, then those entries are transferred to HO. Or unusual items, that is, sometimes the cash deposited by the account holder is credited to such accounts to avoid this SFT or anti-money laundering reporting. This is the format where the information is required to be given: the year, number of items and amount, and other remarks against each of the items. Then contingent liabilities. The non-fund based facilities are contingent liabilities, all bank guarantees and LCs and etc. But if you see the question, the contingent liabilities other than guarantees and letter of credit, acceptances and endorsements, not acknowledged by the branch. So these contingent liability may be in the nature of any tax demands which have come to the branch, or any other suit filed by any customer, or any other claims against the bank which is not acknowledged as debt by the branches. So we need to check the system whether proper controls are there to have a list of such contingent liabilities, and we can have the opening balances of such contingent liabilities and see the movement. And finally, you can obtain one balance management representation letter that there are no other contingent liabilities other than those mentioned in the balance sheet. After balance sheet, this profit and loss account is required to be checked. All items of profit and loss accounts, including interest received and interest paid on deposits, all bill discounting, LCBG charges, minimum balance charges, any other processing charges, so that are required to be checked on test check basis. So you can select certain number of accounts on test check basis and verify such transactions, verify the interest which is applied to such accounts, and prepare a list and keep in your documentation file. With respect to income recognition norms, that is, when the account is classified as NPA, all unrealized interest and charges which are debited in that particular account are required to be reversed. So the accounts which have been made NPA or substandard during the year, you need to see whether such unrealized interest and charges are reversed or not. The interest and charges which are debited in this current year is fine, but we need to see the unrealized interest and charges of the previous year as well, because sometimes the account may be standard in the previous year, but there may be certain unrealized interest is there, so we need to reverse that interest also. Then has the test check on interest on deposits revealed any excess / short debit of material amount? So interest paid, as I said, we need to check interest received as well as interest paid. So if any interest is paid on the deposits and there is any material discrepancy or there is any deviation from the amount which is accounted for, we need to report that. The deposits which are matured, normally these days there is a system of automatic renewal, but if the depositor has not opted for automatic renewal, in such cases the accounts once matured, they are transferred to matured term deposit accounts, and the interest provision is made at head office level and not at the branches. So we need to check the process, how the interest is how that deposit account is classified as matured, and whether any interest is applied to that particular deposit account or not. Then divergent trends in major items of income and expenditure, as we do ratio analysis in all our audit cases. So we need to do a ratio analysis. We need to compare the previous year's income and expenses items with current year's profit and loss account. And if there are any major deviations, we need to record the reasons for that. Then fourth part is general. First is with respect to gold, bullion and security items. The RBI has discontinued selling gold by the banks. Still some of the banks, they are selling golds or gold coins. In the previous times, there are a sale of gold coins from the branches, but now I think only SBI is permitted to import gold and sell it through its branches. So if any gold or bullion or security items are there, it should be kept in joint custody. Proper record should be there. Proper insurance should be there for such items. And we need to see the records of that sale and receipt of those items. If the sale is made to certain customers, then the KYC of those customers are required to be there on records. And whether the transactions are properly recorded. Then security items are normally term deposit receipts, drafts, pay orders, checkbooks. So such security items are required to be kept in a joint custody. Physical verification should be there by the concurrent auditors as well, and by the statutory auditors can also undertake physical verification. And whether such consumption of those security items are properly charged to the profit and loss account. And if there is any loss or shortage of such security items, that should be properly reported to the head office. Because again, if some DDs or checkbooks are missing, that can be a fraud-prone area. There are certain instances where the stolen DDs and checks have been encashed by fraudulently at other branches. Then in case of books and records, whether there are any softwares or systems, manual or otherwise, used at the branches which are not integrated to CBS. So CBS is the main accounting software which is implemented by the head office. And if the branch is using any other software or manual records which is not integrated to CBS, then we need to check such accounting records and whether the information is properly captured or not. Because in one of our branches, we have observed manual bank guarantees issued by the branch. We could find that when we compared the bank guarantee commissions recorded and when we compare it with the CBS, such bank guarantees were not there in CBS. So if such manual accounting transactions are done by the branches, then such transactions are properly required to be captured. Then information system audit, whether the branch is covered by information system audit, because we do audit around the computers, we do not enter into the computers, and what is done inside that black box, we are not actually aware of. So if there is any IS audit is conducted in that particular year, then we need to see the observations or reports or adverse comments of such IS audit report. Then generation and verification of exceptions report. The CBS or the system implemented by the bank, it is designed in a way that if there is any exception or adverse reports, such reports are generated on a daily basis by the system. So these reports are to be properly scrutinized by the branch officials and proper action are required to be taken on that. And then we required to comment upon manual intervention to system generated data and proper authentication. So as I said, we cannot enter into the system. So any manual intervention can only be checked if we try to enter something in that system, and if it permits us, then you can say that this manual intervention is possible. Then I personally don't understand what is data integrity used for MIS at HO or CO level. So how it can be commented on branches, or I think you need to give a disclaimer in that data integrity and everything is controlled by head office, and there are no manual intervention at branch level, and we are unable to provide any comment on data integrity at branch level. Then inter-branch accounts. As I mentioned, there are certain types of accounts which are parking accounts. These are called inter-office accounts, and again, separate reporting is asked for in the LFAR because it's a fraud-prone area. So RBI has also prescribed certain guidelines, and these are scrutinized very heavily. And in last year, there was a circular by the Reserve Bank of India that all banks are required to comply with certain checklists as how many inter-office accounts they are having, how frequently they are internally audited, what are the transactions in that, and the 31st March 2024 is the last date for such compliance. The central statutory auditors of the banks are required to issue a certificate in that respect. So basically at branch level we need to see whether there is any system or whether there is a policy. So identify such transaction, and expeditious clearance is there for such transactions, because as I said, these are all parking accounts. So once the account transaction is parked in that particular account, it needs to be reversed regularly. And if old outstanding balances are there, we need to check, verify, we need to see the aging of such balances, and any unresponded entries beyond 7 days are required to be reported. Then there is a separate section on frauds. So frauds, as we all understand in a common parlance, that it is an action done by any person to defraud or to take benefit out of any fraudulent activity, or by misleading by giving certain misleading information. So this is all definition of frauds. This is cash shortages also included in that. Fraudulent transactions involving foreign exchange. There is a particular procedure for reporting a fraud. If any fraud is identified at any branch, the bank is required to file a report called FMR1 to RBI within 30 days of such identification. But normally, when such a fraud is identified at branch level, it is first reported to head office, then HO takes its own time to investigate that matter, and finally when they decide that it is a fraud, they report it to RBI. So there is a delay, always there is a delay, and RBI levied heavy penalties on banks for delay in reporting of such frauds. So the questions are, if the fraud is detected or classified, but confirmation of reporting to RBI not available on recorded branches. So as I mentioned, the reporting to RBI is done by the head office. So you can comment upon that. There is a fraud, and the report has been submitted to the head office on so and so date. Whether any suspected or likely fraud cases are reported by branch to higher offices during the year. So these are all suspected or likely fraud cases. So if there is any list of such cases, we need to carefully go through that. Comments on the potential risk areas which might lead to perpetuation of a fraud. So report such discrepancies and control lapses which may lead to perpetuation of frauds. And system of early warning signals. So that already has been commented upon. There is an early warning signal. This MIS and CBS also generate such early warning signals at branch level, and confirmation is sent to RBI. There is a committee at head office level who monitor such cases. Then implementation of KYC and anti-money laundering. So there are strict guidelines issued by Reserve Bank of India to check such activities, and basically anti-money laundering. And we need to extract list of pending KYC cases, including for locker hires, Then review of following types of customers induced transactions for customers where KYC is pending. And then we need to verify the responses given by the branches to AML alerts. So these are AML alerts generated by the system. So once a cash is deposited in particular account, the system gives an alert. So as in exception reports, so branch needs to verify those exception reports and give responses to that. Then management information system. Ensure data integrity relating to all data inputs which are to be used for MIS at corporate office level and for supervisory reporting purposes. And finally, this miscellaneous consideration of the major adverse comments arising out of the latest reports. So whatever audits are conducted at branch level during that year, like internal audits or concurrent audits or revenue audits or IS audits, or RBI sometimes conducts inspection at such branches. So if any report is made available or the previous year's branch auditor's report, LFAR, we need to see and whether any major adverse comments are there and how that those comments have been addressed during the year by the branches. And if those comments are still persisting, in that case we need to report on that in our audit report. And then credit audit report that we have already discussed, stock audit reports we have already discussed, RBI inspection reports, income and expenditure, revenue, IT. So thank you, that was all from my side. Now I am open for if there are any questions, so we can discuss that. I would be more than happy to reply to those questions. Yeah, please. Ji. Because the identification is from the account number. Because the name of the borrower or account name can be common in branches across India. So the account number is the only identification number which the HO or any other person can identify. हाँ दोनों का मतलब basically advances तो आपको 100% cover करना ही है, large advances, and other advances you can cover on sample basis depending on your sampling exercise.
Normally sample sampling is of around 10-15%.
Yes. So basically, as you see the SA 230 also down sampling, so it says that sampling can be done in a way that from the entire population no item is left out. So it covers the entire population.
Some of the branches number of accounts are
Very high, very high, very high. Yes. If the number of accounts are low and if the amount as the value is very high, that makes our life easy. But in case the number of accounts are very high, so we can have it on a sample basis. You can spread your samples on the strata like up to 5 lakhs or 5 to 10 lakhs, about 25 lakhs is accordingly, on a test check basis. So more percentage should be given to higher value of accounts so that the overall percentage value which is to be given in that is, yes.
We have to cover a new sanction and remaining per person?
Mostly new sanctions, which have been sanctioned, majorly new sanctions. No, large advances 100%, but remaining advances, even it is sanctioned during the year, you can do it on sample basis. The advances sanctioned during the year need not be done on 100% basis. Yes, please. हाँ. Yes. 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 Because in case of large advances, there is an annexure to LFAR, and that information is required to be filled up by the branch. So they will give you the entire annexure filled up properly. तो भी डॉक्यूमेंट्स तो बैंक के पास अवेलेबल होते ही हैं. मतलब इफ दैट अकाउंट इज लाइव, दैट डॉक्यूमेंट शुड ऑल्सो बी लाइव. दैट शुड बी लीगली एनफोर्सेबल. करेक्ट. जी. हाँ. P&L में उसको डेबिट साइड जाके करते हैं. मतलब जो इंटरेस्ट है उसको रिड्यूस करेंगे और हाँ, और अनरियलाइज्ड इंटरेस्ट को क्रेडिट करेंगे. जो बचा हुआ बैलेंस रहेगा उसका, उस पर प्रोविजन, वो प्रिंसिपल और द इंटरेस्ट विच है ऑलरेडी बीन. हाँ, प्रिंसिपल ही रहा. करेक्ट करेक्ट सब. यस यस. हाँ, और इंटरेस्ट इस साल का भी, और अगर अनरियलाइज लास्ट ईयर का है वो भी. सो अकाउंटिंग पॉइंट ऑफ व्यू से वो इनकम तो लास्ट ईयर चली गई P&L में, बट उसका रिवर्सल इस साल होगा. हाँ जी. Yes. Yes. Borrower wise. The NPA classification is PAN based. So if one account is classified as NPA, all other accounts are classified as NPA in that particular. So all accounts should be made regular. No, not the facility wise. Even if he clears overdue in one account and not in other account, both the accounts will be NPA. So the entire areas in all accounts of that particular borrower needs to be recovered. हाँ जी. 0.25%. नहीं, आपको तो एमओसी जो अकाउंट स्टैंड आप डाउनग्रेड कर रहे हो उसी का देना है. बाकी जो एडजस्टमेंट है वो हेड ऑफिस लेवल पे होता है, वो रिवर्स होता है. हाँ, मतलब बेसिकली एवरी ईयर दे सी व्हाट न्यू प्रोविजन इज मेड. सो पुराना जो प्रोविजन किया था उसको ये करके नया प्रोविजन क्रिएट करते हैं. सो द चार्ज टू प्रॉफिट एंड लॉस अकाउंट इज दिस एडिशन which addition on those accounts which have been treated as NPA during the year. So additional charge is there on the profit and loss account. वो रिवर्स हो जाता है, वो एडजस्ट हो जाता है. जैसे मान लीजिए मेरा टोटल प्रोविजन X अमाउंट है, नेक्स्ट ईयर जब बैलेंस शीट डेट को मैंने किया तो Y आया. सो मेरा बैलेंस शीट में प्रोविजन Y दिखेगा, बट P&L को जो चार्ज होगा वो Y माइनस X दिखेगा. लीगल रिकवरी प्रोसीडिंग्स हैं. अगर जैसे एंटिटी क्या है, फर्म है, अगर पार्टनरशिप फर्म है, हाँ प्रोप्राइटर फर्म है, तो जो उसका लीगल लेयर है उससे रिकवरी होती है. अगर सिक्योरिटी, द NPA क्लासिफिकेशन इज ओनली ऑन अकाउंट ऑफ इरोजन इन सिक्योरिटी, नॉट ड्यू टू द डेथ ऑफ द बोरोवर. अगर सिर्फ प्रोपराइटर है और डेथ होगी तो उसकी जो लीगल हेयर होंगे, उसके जो असेट्स उनको मिलने वाली है, तो देन इफ देयर इज अ प्रोसीजर, इफ देयर अच्छा ओके, रिवर्स मॉर्टगेज अभी बेसिकली तो हाँ उसमें तो फिर जो असेट है उनके पास में उसी से रिकवरी होगा ना, उसमें एनपीए नहीं रहता, बिकॉज दैट असेट इज देयर विद देम, सो दे विल सेल द असेट एंड रिकवर द आउटस्टैंडिंग.
Is SBI doing based on reverse mortgage?
As Mayur bhai is saying, not very common, I think, not common. बाकी बैंक्स को तो पता भी नहीं है रिवर्स मॉर्टगेज. सो थैंक यू वेरी मच.
Thank you so much, sir, for the wonderful interactive sessions. What I understood at the end of the session, most of the queries were on the advances. And to deal with the advances, we have very learned faculty, Chirag Bakshi sir with us. He will be dealing in audit of advances itself. So I get the most of the queries which were on advances will be answered during his session. And looking forward to the interactive coming up session, 4th and last session. Thank you so much, Vikram Gupte sir. It's an honor for an Ahmedabad branch to have your esteemed presence within us. I'm sure the members have truly learned from your rich experience and value addition to their books. Thank you so much. Friends, we're having quick 5 minutes of tea break and sir is with us. We'll not waste much of the time and quickly start with the next session shortly. Thank you.